This is the Global Economic Commodities Scrap Metal and Recycling Report by our Bentley Roll-Off Trailer and Gondola Trailer, January 11th, 2021. U.S. weekly crude steel production rose to 1.65 million tons as the slow growth economy continues, but it is being dragged down by COVID record cases and deaths. Crude oil price rose to $52.24 a barrel, the highest in months on growing demand and continued production cuts, as Saudi Arabia announced yet additional production cuts. The U.S. weekly oil rig count rose to 275, down 83% from the 2014 high. Relatively low prices and low demand, as well as new technology, are keeping the new rig count low. U.S. weekly crude oil production was steady at 11 million barrels per day and remains off the March 2020 high as there remains a slow growth in demand. Scrap steel number one HMS rose, but not clear how much yet, to about $385 a gross ton, the highest in years, on good U.S. and export demand. Incoming supply is just okay, but getting better. Hot rolled coil steel rose to $52.11 per hundredweight, near a 12.5-year high on good demand and tight supply, as well as passing on higher scrap and iron ore prices. Copper price rose to $3.69 a pound, near an 8-year high. Rising copper prices are an outstanding positive future economic indicator. Aluminum price rose to 92 cents a pound, near a 2-year high on the same factors as copper. Cardboard scrap OCC Southeast rose to $85 a ton on the slow increase in U.S. and global demand. China's December Caixin General Manufacturing Index fell to 53 from the 10-year high in November. Remember, over 50 is expansion. New orders rose slower, yet sentiment remains solid and macroeconomic indicators showing stronger for the next 6 months. Canada's December IHS Manufacturing Index rose to 57.9, the strongest improvement in 10-plus years, as output and new orders rose, but supply chains were hurt by COVID. Selling prices increased the fastest in over 2 years. The U.S. November trade deficit of goods and services. Note, last week we showed goods only. This widened to $68.1 billion, the worst since August 2006, making it near the worst in history. Exports rose 1.2% and imports grew 2.8%, with cell phones being the biggest driver. The trade deficit with China widened to $3.8 billion to $30 billion, which is 44% of the total. The U.S. December jobs report was very bad. We lost 140,000 jobs, well below the plus 71,000 forecast. Leisure and hospitality lost 498,000 jobs, and professional and business services gained 161,000. Total U.S. jobs, which are called non-farm payroll, are now at about 142,600,000, the level of October 2015, 5+ years ago. We are now about 10 million off the all-time high of 152.5 million in February 2020, so there is major upside to the economy as jobs come back. U.S. December manufacturing PMI index rose to 57.1, the strongest growth in factories since September 2014. Production growth was the strongest since March 2015, but new orders softened a bit due to supplier delays due to COVID. Wall Street's Dow Jones Industrial Average rose 492 points to 31,098, a new record high on vaccine optimism and continued massive government stimulus. The recovery is slowing, though, as record daily COVID deaths are causing various closings. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week in these difficult next 6 months.